talk me through the year ahead. The challenges seem to be mounting on the global stage. You've just published numbers. Give us a little bit of guidance on where things go from here.
Hi, Guy. Yes, we closed out the year very strongly in 2019. We had a strong fourth quarter. We had record levels of free cash flow. So we really did close the year strong. We did share our 2020 guidance, and we did have a number that was down from our 2019 performance, primarily based on some price decreases that occurred through 2019 that will flow through 2020. And then with some of the demand environments, we are directly and indirectly connected to the Chinese economy with some of our products. That's been a challenge, and it's been made even more difficult with the coronavirus. We don't know exactly how that's going to play out, but there's a little bit of uncertainty in the market. However, in the U.S. part of our business, which is about 65% of our company, our demand is still strong. We primarily make boxes and fiber-based packaging here, and we feel real good about that.
As you say, though, you do have a little bit of exposure to China. So if it's okay with you, I might just explore that for just a moment, as
Sure.
It seems to be top of mind right now. Clearly, you would probably have benefited from the phase one trade deal. I would imagine that a lot of the agricultural products that flow out of the United States probably involve some of your products at some point in time. So I'm curious, do you see the situation where kind of the coronavirus is offsetting the benefit you would have had from phase one?
Well, we have seen some improvements in exactly the segment you talked about. Some of our agricultural customers that make their product here and ship it to China, they've seen their business pick up. I think the coronavirus potentially has the potential to put a bit of a pause on that, but we haven't seen that yet. I think it's early days, and hopefully this can be contained and they can solve it relatively quickly. But the phase one agreements are definitely beneficial for our U.S. customers who export, but also for our own business where we export products we make in the U.S. to China.
Mark, can you give some more color on that, in that the trade deal is signed, all of a sudden all your customers pick up the phone and say, okay, I'm going to spend $1 billion. What's sort of the process that you noticed?
So what we notice is in our packaging business, for example, Alix, it's a very short cycle business. So we ship packaging to factories that make food and just about everything, and it's just in time. It's there as their packing lines are running. So when our customers get increased orders from their export markets, in very short order, within a week or two, they're going to need an incremental packaging. So we see it, in effect, as our order book has a lot of new orders in it, and our customers tell us it's for incremental business to some of our export markets.
In the meantime, in your statement, you talked a lot about how you manage your cash flow and your capital and cutting expenses. If we continue to see the coronavirus as well as maybe trade issues continue to emerge, how many more levers internally do you have to pull to help?
Well, we've got a fair amount of levers to pull in terms of how we manage our cash flow. And again, the exposure we have directly and indirectly to, for example, the market in China, just to give you a percentage roughly, we have a $24 billion revenue line, and it's less than $1 billion in those markets. It's more like 500, 600 million directly, and then indirectly through our customers. So it's material, but it's not the largest part of our business. So we have the ability to move our capital expenditures around from year to year and our inventories, despite some fluctuations in earnings.
The president says the U.S. economy is in the best shape it's ever been in. Is that your perspective as well?
So I think the number I saw today earlier was about 2% for 2019, roughly GDP. Our businesses tend to track just below that. So for us, it's a 1.5% type of environment. So better than it had been years ago, but not the strongest. We think the U.S. economy suffered from some inventory builds in our customer supply chain throughout 2019, and we're seeing that tighten up. So we are expecting a little bit stronger performance in 2020 in the U.S. economy.
Mark, can I ask you a more general question? One of the massive topics in the World Economic Forum in Davos last week was ESG, sustainability, the environment. You obviously have a lot of recycling involved in what you do. I understand as well that you try and use biomass when it comes to the energy you use in your plants. How big a story is this going to be in the plans that you make going forward from here? Clearly, investors are looking for businesses that have an ESG tag on them. Does yours, and how much work are you putting into that?
It's a great question, and yes, I'm getting more direct questions from our investors, the portfolio managers who make the decisions, and our story is strong. When you think about our business model, Guy, we start with renewable natural resources, so recovered paper and wood fiber that's grown for the purposes of making pulp and paper. We make 85% of our energy with the biomass you mentioned, which is carbon neutral biomass, generating our energy, so we're no burden on the fossil fuel grid. And then in the case of the corrugated package, 92% of that product is brought back in through recycling into the stream. So for our customers who have lots of different materials they have to use, depending on the product they make, we are a major help in their overall sustainability story.